I guess first for everyone who may not, if you're totally new and you have no idea what we mean by 280E, basically, very long story short, because cannabis is a Schedule I drug and it's still technically federal drug trafficking, you can only deduct cost of goods sold from your tax return. So, and Mitzi, correct me if I'm oversimplifying, but basically you're paying taxes on gross profit, essentially, right?
Yeah, and
like your taxable income for federal purposes is your gross profit.
Yeah, and you can thank Jeffrey Edmondson for that, who is really like a cocaine, like a drug dealer, who back in 1980 actually filed his tax returns claiming deductions for his illegal income. And that, Congress, kind of challenged that and said, well, this is ridiculous. He wanted to write off the cost of his beeper and, his travel and his mileage and things like that to go deliver, cocaine and amphetamines to his clients. So he was able to do so because there was nothing in the tax code that prevented him from deducting his ordinary and necessary business expenses for the generation of not just illegal income, but income derived from trafficking in a controlled substance. And it's Schedule I or Schedule II of the Schedule of Controlled Substances, of which marijuana is still classified as a Schedule I drug. So therefore, you get absolutely no deductions or credits on your tax return related to any sort of ordinary and necessary business deductions if you are trafficking in a controlled substance. What you do get is an allowance for your cost of goods sold, because your cost of goods sold is considered to be an adjustment to your revenue as opposed to a deduction from your income. So that being said, it's absolutely imperative and important that you understand, if you're investing into cannabis companies, what is the impact of 280E on the results of operations? Because in most businesses, you typically look at EBITDA and you say, well, all businesses are kind of apples to apples, and I'm going to end up kind of comparing what the operating results are to others of its same performance or others of its same category. But you have to consider the tax impact of these businesses, because it's not only the current tax impact, but what kind of positions or tax positions may the company have taken in the past that may be uncertain, that might lead to an adjustment or under audit, because these companies are subject to audit at a higher rate than most other companies. What are the impacts to you if you're either looking to do an acquisition of a company and you're acquiring the stock? Because in certain states you can't just purchase the licenses, you have to acquire the stock of the business. And some states have changed that, Massachusetts being one of them, where you used to have to buy the stock, but now they've kind of changed that so you can buy the assets. But if you're doing a stock purchase, you're inheriting all of the past problems. Exactly. So you're inheriting any particular tax positions that may be questionable. And the reality is there's only a handful of tax court cases that really have a significant impact on the cannabis industry. And I think most people think of Champ and Olive, and they've heard of some of those tax court cases. But some of the later ones that came out, which we haven't really, it's been kind of quiet in the past, I guess I'd say 15 months or so. But Alternative Health and Harborside were the two most recent cases that came out really at the end of 2018 at this point. And those cases were instrumental in kind of establishing Congress's reach a little bit more into some of these potentially non-plant touching companies that they may be subjected to 280E as well. So when you really kind of think of it from the investor's perspective, you have to understand that you're really kind of looking at margins. And what happens when the margins are squeezed because of additional licenses, supply and demand? Then what are the fixed costs that are underneath that can be absorbed by the margin? And it's a little bit different, because then you have this tax bite that's based on margin, not based upon your net income. So exactly. Huge issues in this industry.